Hello and welcome back to Josh Delosier Investments. Today we're talking about the Fed meeting that just happened and the future outlook. Jerome Powell just had his meeting this month and discussed the economy and decided against interest rate cuts for the moment. The Federal Reserve held its benchmark interest rate steady at 4.25% to 4.5% for the fifth consecutive meeting. So basically there's no clear signal was given about potential rate cuts at the next meeting in September. Basically we're waiting on more data to come out about interest rates may actually drop if Donald Trump has his way. However, it seems like the Fed's not really in any hurry to change the rates. You know, stocks are at all-time highs. We also had some jobs data come out today that made the stocks drop 3% or better. If you're looking to invest in NVIDIA, it's down 3% today. Tesla is down today. Excellent opportunity to buy these large cap companies with moats. Also, Carvana just had earnings and just surpassed all expectations. So, if you're not invested, now's the time to get invested in the market. It's hotter than it's ever been. And we should continue to see stocks at all-time highs for the rest of 2025. But just taking a quick look at the Fed's overall outlook. The Fed adjusted its language, saying economic activity had moderated in the first half of 2025, while job growth and consumer spending have slowed. The unemployment rate remains low and overall conditions are still considered solid. Before the meeting, investors saw better than an even chance of rate cuts by September. Now we're kind of expecting a 50-50 outlook where there'll be a rate cut or not. I personally don't believe there are going to be rate cuts, as long as inflation remains under control. We also take a quick look at we just take a quick look at the numbers right here. The Fed's preferred measure is the PCE inflation. It's now projected at 3% for 2025, which means that's slightly higher. It's up from 2.7% in March, reflecting the impact from the tariffs that started back in April. We actually seen stocks such as Coinbase and other stocks just fall 20% or better. If you're in growth stocks, you had a great buying opportunity to invest in any of these companies having amazing years. Carvana, Spotify, and Coinbase were all pulled back, double digits, and there's an excellent buying opportunity. And if you invested in, you made a ton of money very quickly. This is August, so within a matter of a few months, you were able to make 20% or better. So the key is always stay invested and keep dollar cost averaging in these companies with moats. And you can see exponential growth over time. We'll take a quick look at the core PCE inflation. Its forecast is at 3.1% for 2025, a notable jump from earlier expectations, and is not projected to return to the 2% target until after 2027. The year-over-year headline inflation rate was 2.7% as of June 2025, with a core inflation at 2.9%. Looking at the interest rate policy, the Federal Reserve's kept the rate roughly the same, and but there's still, like I said, a few analysts out there that believe we'll see rate cuts later in 2025, but it just really depends on their particular outlook. Markets and many economists expect the Fed to begin cutting rates in the second half. So, and they tend to support Donald Trump's decision to cut rates. He has, he has a very strong policy on wanting to be very aggressive with the stock market. But that's his view. While Jerome Powell tends to take the wait and see approach. So we'll have to wait and see if there's any change. But at the moment, we should see more of the same, which is great for investors overall. The Fed's own projections show a year-end 2025 Fed funds rate median of 3.9%, with a gradual path toward 3.4% in 2027. Markets are betting on a somewhat faster pace of cuts if economic conditions deteriorate. So, basically we're going to have to see an increase in inflation to get a rate cut. Really, there's still a lot of uncertainty going on with tariffs, which, play a crucial role whether we get rate cuts this year as well. Chairman Powell and other officials have highlighted the importance of having balance. The labor market is still good enough so the Fed can afford to keep rates higher to bring inflation down, but they are prepared to act if necessary. The economy is probably the best you could expect. So, we're not really wanting to upset the balance of things right now. The Fed's pretty much happy the way things are. And there's actually growing calls, both politically and from the market, for the Fed to cut rates more aggressively, be more aggressive in their decision-making process. But really, if it's not broke, don't mess with it. That's generally been the Fed's view at the moment. We take a quick look at the numbers and the forecast. We look at GDP growth. It's at 1.4% in June. And in March, it was at 1.7%. Take a quick look at unemployment rate at 4.5% compared to March at 4.4%. PCE inflation is at 3%. And in March is at 2.7%. And June's core PCE inflation is 3.1% compared to 2.8% in March. We look at the Fed funds rate at 3.9% in June compared to it was also 3.9% in March. So we're expected to have slower growth and higher inflation. You know, it often seems to me that we have a lot of analysts always wanting to downplay the forecast for the future. Personally at Josh Lozier Investments, we're believing that we're going to see record highs in Q4 of this year. So, if you're not invest in these growth companies, please check out our other videos. Appreciate everyone watching today. Please hit the like and subscribe. And if you have any questions or comments, leave them in the comments below. And we'll make another video next week. Hope everyone has an amazing weekend.